Well, we're back for round two of our Markets with Megan today. It is Wednesday, June 12th, and this morning we came to you with the Consumer Price Index report from May, and now we're coming to you with the June Federal Reserve meeting. This was a very highly anticipated meeting. There was no expectation that they would cut interest rates at this meeting, and they did not. They kept interest rates unchanged. But the focus was on how they would word this. What was their expectation for the rest of this year? What would they do with their expectations for both unemployment, inflation, the Fed funds rate, as well as GDP? So let's take a look at what they did come out with. So for the Fed projections, the median projection for 2024 in regards to GDP did not change. It's 2.1%. The unemployment rate also did not change, looking for 4% this year. And then the median projection for core PCE actually did increase a bit to 2.8% versus 2.6%. So if you have an increase in the median expectation for core inflation, which is their PCE is their preferred measure, that would typically translate into the expectation for less interest rate cuts. And that's what we got in this report. Right now, Fed officials are only expecting one interest rate cut this year. We don't know the timing of that. That is down from their March projection of seeing 3 interest rate cuts. Now, they reiterated in their press conference that they remain data dependent, and we realize that. They were given the report from this morning, and they could make adjustments if necessary, but they did not. They think that there is progress being made on inflation, but they're not there yet. And this is what we've been saying frequently, that inflation is getting better. We say better from a very high point, but when you're still growing over 3% on an annual basis, that is continuous strain on consumers, and that is still an inflationary environment. And the Fed did come through and say that today, that they're more concerned about getting that down, being confident that it's coming down to their target before they even talk about interest rate cuts. They did make one comment. There's been some wrangling around when we got some hotter than expected reports earlier this year that we may see an interest rate hike. They said there were no committee members that actually talked about an interest rate hike at this time. So the markets, we had a great rally after the CPI report that has given quite a bit of that back. We're basically flat here in the equity markets. Bond markets, the yields did go up a bit, but still they're lower on the day. There's a lot more information to come out from the PPI, PCE. There's the employment report. We'll get data on ISM manufacturing, ISM services. All these things will come out before they meet next. So there's a lot of information to go through, and we'll be sure to come back to you to reiterate our view, talk about what we think, and if that changes anything where we expect the Fed going with interest rates. If you have any questions or comments, please feel free to reach out to podcast@verdens.com. Thank you.